Close Brothers' recent £1 billion provision, following a thorough assessment of a landmark court case's implications for the UK vehicle loan industry, underscores the significant uncertainty surrounding the outcome of ongoing appeals and the Financial Conduct Authority (FCA) investigation. This substantial financial commitment comes on the heels of the company's dividend cancellation and a £400 million fundraising initiative aimed at bolstering its balance sheet, highlighting the gravity of the situation. The FCA's investigation, spurred by a surge in consumer complaints over car finance practices, focuses on secret commission payments or discretionary commission arrangements, DCA, prevalent in car loans issued between 2000. These DCAs granted car dealerships and brokers the authority to set interest rates, directly influencing their commission earnings. The inherent conflict of interest inherent in this system, incentivizing dealers to inflate interest rates for increased personal gain, prompted the FCA to ban DCAs in 2021. A pivotal October court ruling against FirstRand Bank and Close Brothers declared these commission payments, made without borrowers' knowledge. This landmark decision, reached by the Court of Appeal, has sent shockwaves through the financial sector, prompting widespread scrutiny of similar practices and potentially far-reaching consequences for lenders involved. The FCA's December deadline for a final decision holds immense significance for the affected lenders. A potential outcome includes the establishment of a customer compensation scheme financed by the lenders implicated in the DCA arrangements. The scale of this potential payout is substantial, with analysts projecting a range of £8 billion to £13 billion across the industry. This underscores the potentially crippling financial burden facing lenders, particularly those with significant exposure to this type of lending practice. Lloyds Banking Group, identified as the most vulnerable among major UK high street lenders, has already earmarked £450 million to cover potential fines. This proactive measure reflects the seriousness with which Lloyds views the potential fallout and the proactive approach they're taking to mitigate potential financial losses. The sheer magnitude of this provision serves as a stark reminder of the extensive financial implications of the FCA investigation and the potential repercussions for the broader financial landscape. The Supreme Court's acceptance of Close Brothers and FirstRand's appeal against the Court of Appeal ruling further complicates the situation, prolonging the uncertainty and delaying resolution. The FCA's announced intention to formally participate in the Supreme Court proceedings, offering its expertise, signals the regulator's determination to ensure a fair and just outcome, protecting consumers from exploitative lending practices. Adding another layer of complexity, Chancellor Rachel Reeves' unprecedented intervention highlights the government's acknowledgement of the potentially devastating economic consequences. The Treasury's submission to the court, emphasizing the potential for considerable economic harm and the possibility of making car loans scarcer and more expensive, underscores the broader societal implications of this case. This intervention emphasizes the government's concern about the wider impact on the economy and its commitment to protecting the stability of the financial system. The sheer scale of the provision made by Close Brothers, coupled with the ongoing FCA investigation, the appeals process, and the government's intervention, paints a picture of significant uncertainty and high stakes. The ultimate resolution will have profound repercussions for the UK car finance industry, consumer protection, and the financial stability of institutions deeply involved in this type of lending. The potential for widespread economic disruption and the need for a swift and decisive resolution are undeniable. The impact on borrowers, lenders, and the overall financial ecosystem remains uncertain, emphasizing the need for transparency and accountability across the industry. The coming months will be critical in determining the final outcome and its far-reaching consequences.